only an opinion. If there is one thing, my dear friends, that every entrepreneur needs to remember to survive in business, it is this statement of Alfred Rappaport, made way back in 1932. Bala, can you admit the people as they are joining? I have made you the co-host.
Yeah, I will do it, sir.
Thank you. Is that recording on?
Yeah, it's recording is on, sir.
Thank you. So, my dear friends, if there is one thing which every entrepreneur needs to remember, is that cash is a fact. If you don't have money, you are in deep, deep, deep trouble. Profit is only an opinion. Today, this program is all about managing cash and ensuring you have an adequate amount of it consistently throughout the period that you're doing business to carry out your business smoothly. How many of you are familiar with the word simplicity? Simplicity is a combination of two words, simplicity and complexity. Simplicity is an emerging theory that draws upon general systems theory, dialectics, and design. It was first used by Jeffrey Kluger when he wrote a book about this phenomenon that describes the tendency of simple systems to generate complex issues and how complex issues and complex things generally have an interface which is very, very simple. In other words, when adopted into the world of commerce, simple things which we tend to ignore most of the time lead to very, very complex problems, and they cause a lot of problems for us, while complex concepts and complex situations have very simple solutions which, when addressed properly, can lead you to all sorts of benefits. We are going to be looking at simplicity with an example. I want one volunteer. Who will volunteer for me? I just want one volunteer. Will anyone from the African subcontinent volunteer for me? One volunteer only out of 92 people who are here. That's not asking for much. Yes, Mr. Chama. Are you volunteering? Who is going to volunteer? At least let me have one volunteer. Bala, would you like to volunteer? I say people are very shy.
Sir, many people have raised their hands, sir.
Mr. Chris.
Sir, Mr. Zafar, Mr. Chris.
Yeah, Mr. Chris. Kampamba, can you please unmute your video?
Yeah, he is unmuted, sir.
Yeah, it's very dark, Mr. Kampamba. I think you are sitting.
I've just joined the meeting. Hello?
Yeah.
See, I'm saying I've just joined the meeting. Phone is not.
Oh, it doesn't matter. Then you can mute yourself. Let us have someone else.
What do you want people to volunteer for? I mean,
please, Mr. Andrew. Mr. Andrew, you can come on the video.
I want to know what to volunteer for, first of all. That's why I'm not, I didn't get your question. What do you wanted to volunteer for?
You see, we are talking about a theory called simplicity. Simplicity is a combination of simplicity and complexity. Jeffrey Kluger spoke about how simple systems have a tendency to become very complex and how complex problems have very simple solutions. As an example of what simplicity is, I want a volunteer through whom I can show how simplicity really works. Who would like to volunteer for it? Okay, Bala, can you do it?
Yes, sir.
Okay, I am pinning you. So
and Ramarao sir is also ready, sir.
One person.
We two are there.
Okay. I am also ready, sir.
Okay.
Now,
I think we will give the chance to Ramarao sir now, if it is
Bala,
okay.
We will go with you.
Yeah, sir. Sure.
Okay. So what we will do is, I want you all to observe simplicity in working. Let's see. Bala, tell me, recite
Yes, sir.
the numbers 1 to 20 sequentially. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I want you to recite it.
Between 1 to 20?
1 to 20 sequentially from 1 to 20.
Yeah, I will, sir.
Please.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20.
Excellent. So it's a very simple thing, isn't it?
Yes,
Now
sir. Very,
what
very
I
simple.
want you to do is, I want you to recite the same 20 numbers without any sequence, haphazardly, without a break. You should not miss any number.
Okay. But it should be 1 to 20.
1 to 20 without any sequence, not a single number broken, no sequence.
Okay, sir. I'll try. 5, 1, 3, 9, 6, 8, 11, 15, 19, 20, 16, 19, 12.
Are you seeing how difficult it is?
Yes, yes, sir.
So
think I
a
have missed it.
simple thing like 1 to 20 becomes an extremely complex thing when you don't follow the sequence. Business is also something very much like it. That is what simplicity is all about. Counting the number 1 to 20 sequentially is very easy. But when you have to tell the numbers 1 to 20 at random, it becomes very, very difficult. When the business processes are understood in a sequential and simple manner, the impact on the business is phenomenal. Phenomenal. Many of you might have seen that some people have great success in doing business, and you must be wondering, what is this person doing which has made it so very easy for him to succeed? He is following a sequential manner in which to do things, in a very logical way in which to do things. Lack of knowledge in terms of their application and consequence is the reason behind all the problems in business. Lack of knowledge is the main problem. Otherwise, business is a very, very simple way of doing things. There can be many reasons why your company is not doing well, or why it is not growing as fast as it should. Whatever the reason may be, my dear friends, one thing is guaranteed. You are at the center of it. You are the reason why the company is not doing well. You as a promoter, as an entrepreneur, are the reason why the company is not doing well. An entrepreneur is in fact a very, very intelligent and courageous person. But unfortunately, not knowing a few simple things. Can everyone mute themselves, please? There is background noise coming. Mr. Bala, can you please continue muting the people who are all opening up on, please?
Yeah, I will do so, sir.
Unfortunately, not knowing a few simple things can lead to big blunders that can cost you your dreams. Simple missteps can shatter your dreams. Recognizing them is the first important step. You know, Einstein said, madness is continuing to do the same thing while desiring a different result. We are guilty of many small mistakes, simple mistakes that cost us heavily. Let us see a few of them. Who knows? You may recognize that you are doing some of these mistakes. And today you might find an opportunity to correct it. So what are those a few simple mistakes which all of us make while doing business, due to which our business does not grow as fast as it should, or the business does not produce a revenue that we want, or the business does not manifest into the corporate that we all thought and started? Simple mistakes that they make. The first of them is no plan and haphazard activity. Many an entrepreneur is guilty of this. guilty of a haphazard activity without any hardcore plan. The second mistake is that they are too busy doing business to consider how to develop their business. They think doing business is equivalent to developing a business. No, my dear friends, doing business is not equivalent to developing your business. Developing business requires a different mindset, a different way of your involvement, other than how you do your business. The third thing is jumping from one failed idea to another without stopping to think. We do so many things in the process of doing business, and we keep on moving from one to the other. Something doesn't work, we just drop it and move on to the other. We never give a thought to find out what the real reason is that the idea failed, where could be the fault, and what should be done before we move on to the next idea. And in the process, the same problems repeat themselves. Sit down and think for a few moments how many times you have found that the type of tragedy that you are facing keeps repeating itself in your business and professional life. The fourth is having a marketing plan, either on a small piece, piece of paper here and there, or just in your mind. You don't have an elaborate marketing plan, well charted out and listed out, which will take you to the objective, the goal, and the destination that you want to take your company to. Many people don't even have a concrete marketing plan. They only make untargeted attempts at generating sales. Are you very focused? Are you clear about who your customer is? Is your target customer being addressed correctly? Have you divided this target customer into existing customers, potential customers, and a customer who is on the fence? Are your attempts very targeted? Making uninformed decisions with your heart. Just make a decision at the spur of the moment. You don't take into account all the information which is necessary to make a decision, and these uninformed decisions cost you a lot in terms of failed ideas and failed investments. Trying to do too much too quickly. Every activity requires a certain amount of time and resources to be allotted to it. If you are trying to do too much too quickly because you are in a hurry, things are not going to work out. This is one of the mistakes that entrepreneurs make. Repeating what doesn't work. Something doesn't work, we keep on repeating the same activity. We release an advertisement in a newspaper, in a local newspaper, and trying to attract customers. It doesn't work, but we don't stop to think what's wrong, either with the advertisement or the segment that we are targeting. We continue releasing the same advertisement in the same newspaper ad nauseum, thinking something will work somewhere. That brings us to believing the salesperson and making investment decisions. Most of us have people who advise us on many things. A time comes when we simply stop thinking, we just take their advice as it is and start doing things and make investment decisions which go wrong and jeopardizes our entrepreneurial journey. Letting fear paralyze the taking of positive action. We are worried what will happen. We are not very sure about the consequences, and even when an action is called for, we don't take it. And that affects us in the long run. Then you have mixed messages with no coherent theme. When we are messaging the objective of our corporate, our enterprise, our business, we give mixed messages, messages which contradict each other. There is no any coherent and consistent theme. We are not sticking to one particular message, allowing it to sink and take root. This can be a major mistake that business people make, entrepreneurs make. Complicating marketing activities and messages. We say something, we do something. When there is a conflict between what we are saying and what we are doing, it confuses the audience, and the customer today has got so many options that he is not willing to give you a second chance. And in the process, we suffer. Making excuses, I haven't the time to market my business. This is one of the most common mistake that entrepreneurs make. They say they don't have the time to think and market their business. They are so busy doing business. There is a saying, being busy doing business while you are going out of business. That is what this is. You are busy, but you don't have time to market your business, which is the reason why you are there. Thinking that marketing is complicated and avoiding it. Not believing professionals and letting them do the job. Not getting people on an outcome basis to work with you or for you in developing your business because you think marketing is complicated. Then we come to working very hard but not getting results that match your efforts. Many entrepreneurs have the complaint that most of the time they are spending on the business, but the results are not commensurate to the amount of time and effort they put. Relying on only one or two methods of generating your business and generating revenue. When you're not exploring how you can generate greater business and greater revenue and sticking to just one or two methods which you know, that is a sure shot signal that you are going to get into trouble soon. Because your competitor will very soon interpret the way you do business, and then he will attack it, and then you will have no way to hide, no place to hide. Suffering from feast and famine revenue cycles. There will be months and times when there will be a lot of money flow, and there will be times when the business will be very dull and there won't be any money flow. This is called the feast and famine revenue cycle. You will be all euphoric when there is a lot of money flow and spend at random, only to find you're caught on the wrong foot when the dry season comes and the business suffers. Keeping poor records of important prospects and customers. This is a very, very critical area for every business, keeping records of your customers and prospects. If you are not keeping records on a regular basis, you are inviting trouble. Not really being able to explain why someone should buy from you. This is one of the key reasons why you are unable to give a message, why your message is mixed, why your marketing efforts fail, because you don't know why they should buy from you. If you, as the entrepreneur, the promoter of the company, it's not clear why your customer should come to you, why he should give you an opportunity to serve him, what benefit you are having in your up your sleeves that you can give him, why will anyone come? If your message is not clear as to why he should come, he's not going to come. And finally, hoping and praying that business will come by itself and not taking any action. My dear friends, praying to God never got business to anyone. God has got a huge amount of people to look after. He is not going to be attending to all these wishful thinking of entrepreneurs that things should happen. All these problems, all these behaviors can be brought into three major segments of business. If I were to divide all these mistakes which entrepreneurs make, three very clear segments are visible. Number one, the customer. In other words, what is your strategy for customer relationship and services? How do you strike a relationship with your customer, maintain and build on that relationship? How do you serve your customer? This is the first and foremost thing, because without a customer, there is no need for a business. A business is there only to service a customer. The second is the product. What product and service are you offering to the person who has come with a need for you? In other words, what is the corporate innovation strategy? We are in a world which gets commoditized at the drop of a hat. You bring a product today, tomorrow there will be 20 other brands of the same type in the market. In other words, you will become a commodity and no more a product or a service. So what sort of an innovation? Be it the smallest shop with only the entrepreneur working in it, or a giant industry, both are ultimately catering to the customer. So innovation is important in both the cases. Innovation does not necessarily mean creating a new product. There can be sustaining innovations, there can be efficiency innovations, there can be disruptive innovations, there can be market creating innovations, there can be radical innovations. There are so many types of innovations which you can implement in your organization, however small or big it may be, and ensure that you differentiate your product and services in a commoditized market and get ahead. And the third is obviously money. That is finance management. Today, we are going to see one particular aspect of the third part, that is money, called cash flow. Cash flow is a lifeblood and central to finance management. If you don't manage your cash flow efficiently and effectively, you will be in serious problems. While if you handle it well, nothing can prevent your growth and prosperity. You can be absolutely sure about it. If you handle it well, nothing can prevent your growth and prosperity. So let us understand some of the problems that can happen due to pure management of the cash flow. And then we will see in detail how cash flow itself can become a problem. First, we will see what happens when there is a poor cash flow management. Number one, if the cash flow in your organization is poor, your payment to your suppliers will become late, and this will lead to strained relationship with your supplier. And in the long run, this will have a very serious impact on the overall operations of the company. This is relevant to one-man shows as well as companies with 1,000, 2,000, 10,000 employees. It does not matter how many employees are there. If your cash flow is bad, payments will get deferred and problem. Late and missed debt repayment. Every company has taken a debt or a financing from somewhere. Payment of interest will get delayed. This will result in a decrease in credit rating of the company, and future loans will become a problem. Additional debt to cover business expenses. If you don't have money, if the cash flow is not properly managed and the liquid cash is not available, you will have to take loan, and that will increase the debt. That means more interest will have to be paid. Your business expenses will go up. They will not come down. Every penny you borrow is going to add to your business expenses. Missed opportunities to grow through businesses, through investment. If you are not having adequate cash flow, you will not be in a position to invest properly in your business. And that means opportunities to grow will become less, or you will have to miss those opportunities. Negative impact on marketing strategies and competitive advantages. You propel forward in your market by generating a competitive advantage over your opponent. That you will miss. And you will not have adequate funds to implement your marketing strategies. That means you will start losing ground to your competitor. And that will have a negative impact on the corporate. Covering business expenses with personal funds. When this happens, what will you do? You will take money out of your personal account. Maybe you will mortgage your house, mortgage your car, draw money on your credit card, Maybe take money from your spouse or pledge your jewels and other things. In other words, you'll start investing in your business from your personal fund, which can have a very serious impact on you. Reduce employee morale and unpaid wages. When there is less money, the first thing to get delayed is payment to suppliers. The second thing to get delayed is salary to your own employees. Please remember one thing. Employees are your internal customers. Right in the beginning, I told you that a company is there only because of the customers. A company runs only because of the employees. When employee wages are not paid, when there is a reduction in the employee welfare expenditure, employee morale will go down. When employee morale goes down, employee output will go down. And when employee output goes down, automatically the company will start suffering. That means there'll be reduced customer satisfaction. If the company is not optimally performing and working, if the employees are not fully dedicated and engaged, the first person to be affected because of it, again, is the customer. Service to the customer will not be good, and your corporate will suffer. All these put together will lead to only one thing, my dear friend: business closure due to insolvency. You know, there is this saying, for want of a name, a war was lost. Just because one small thing like a cash flow was not managed properly, a company can close down. While its books will show huge profit, the company will close down because it does not have the money to run on a day-to-day basis. And this cash flow problem can be generated by many things in a company. There are many, many things which can generate a cash flow problem. So let us now see what can lead to cash flow problems before we see what are the solutions to it. I would like to ask you, the audience, what are the various things which can lead to cash flow problems? Would any one of you bother to tell me?
Over inventory. Over inventory.
Who is it?
Excess inventory.
Okay, excess inventory. Next. Delayed payment from customers, correct? Delayed payment from customers. Then anyone else? Over borrowing, very good. Over borrowing, poor cash planning, correct? No proper accounts. Excellent. No proper accounts. See, all of you, there is a lot of background noise coming. Lot of background noise. We don't need to disturb everyone to share our thought. More than required fixed cost, correct? More than required fixed cost, beautiful, beautiful, 6 points. Then spending more than what you have, very good.
There is no
planning. Yes.
There is no continuity in the business cycle, sir.
Okay, poor business cycle or erratic business cycle, poor financial forecast, absolutely right. Does not understand the process, loss-making deals, yes, loss-making deals, very good. Unplanned expenses, use of funds for personal and physical stress, yes.
Mental tension leads to physical stress.
Yes, anything else?
Ramarao said assumptions.
Overstocking, higher inventory, you're right. So you see, there are lack of planning and expenditure. See, again and again, we are rotating through 3 plus 5, 6, 7 areas only. Are you seeing that? You can see that all of us are rotating in 7, 8 areas. Telling it in different ways. The language is different, but we are unable to move beyond that. Now, what we will do is we will see what exactly are the various things first. Then we will go into how to handle each of these. Should we do that?
Yes, sir, we will do it.
Somebody, Bala, please mute them, Bala. Otherwise, we are going, no, we will not be able to go anywhere. My dear
I'm
friend,
unable to mute them, sir.
I'm requesting you kindly keep your audio muted. Please, there are 100 people here on the platform. Kindly keep your audio muted. Don't unmute unless you are asked to unmute so that others will not be disturbed. If you have any question, note it down or put it in the chat box. I will give adequate time and answer you. Mr. Osborne. Okay. Do you want to say anything, Mr. Osborne? So let us continue. Let us see the various things which can lead to cash flow problems. One of the most fundamental things which can lead to cash flow problem, which every company. Now, what I'm suggesting is, you can put your email ID in the chat box if you are interested in having the video recording of this. Only those who have attended the program will get the video recording, others will not. Only those who want it will get it. If you want the video recording, please put it in the chat box, your email ID in the chat box. The first and the foremost important thing which a company should do, which if it doesn't do it, sooner or later it is going to face a cash flow problem, is not having a cash reserve. Not building a cash reserve is a clear-cut invitation to getting into a cash flow problem. Because the flow of money will not be even throughout your entrepreneurial journey. Having a cash reserve is a very good way of ensuring that you can take care of yourself on a rainy day. The second thing which can lead to a cash flow problem is slow paying invoices. When your invoices are not cleared regularly, when the payment gets delayed, there can be a cash flow problem. There will be a cash flow problem. The third is, like someone said, expensive debt. When you have taken loan far beyond what you require, or you can pay the interest. Just a minute. It's not working. You will not be able to write anything in the chat box because I have muted all. I will unmute again at the end of the program. Then you put your email ID in the chat box so that I can send the video to you. The third is the expensive debt. When debt servicing becomes very, very costly, when the interest that you are paying on your debt is very high, then you can get into a serious cash flow problem. High overhead expenses, somebody was telling about the cost. High overhead expense is another reason why you can have a cash flow problem. Excessive inventory. When your inventory is more, you can have a cash flow problem. Another person was telling no proper accounting procedure. When your bookkeeping is bad or you have no bookkeeping, very, very small companies, they have this problem. They don't have a bookkeeper. They don't keep the books. Even if it is a one-man company, one-man shop or a retail or whatever it is, one person, there should be proper scientific bookkeeping. That is essential for the company to grow. You have started a business not to remain as a one-man business, but to grow. So automatically you should do the things which are necessary so that you can develop the business. Doing business is one aspect of it. Developing business is another aspect. Ignoring your financial statements. What are your receivables? What are your payables? What is your cash flow statement? What is your profit and loss statement? What does your balance sheet say? All these things are important financial statements which you should see regularly. What does your bank statement say? Do you have the habit of checking your bank statement on a daily or a weekly basis so that you can reconcile the income and the expenses? Incorrect sales forecasting. This is, like one of the gentlemen or the lady was saying, that when you are unable to forecast what is going to happen, when your sales cycle is not consistent, some days you sell a lot, some months you don't sell at all, some months you have planned for something, you manufacture and keep it, but you are unable to liquidate it. Incorrect sales forecasting is another reason why a company can get into bad cash flow position. Employee theft. None of you spoke about it. This is a very serious thing which happens in every company. We will see what are the different types of employee theft. I'm not trying to cast aspersions on anyone. I'm just saying that these are realities which we should be aware of if we are going through business. Then you have seasonal demands. 365 days of the year will not be the same. There will be periods when your business will do very well. There will be periods where there will be a slump. There will be periods where the business will be dull, maybe not good, not bad. These seasonal demands can lead to serious cash flow problems if you don't know how to take action on that. Too much of bad debts. If you have a business where you give credit to the customer not paying after taking the goods is another major problem. Bad debts. We often write off bad debts and in the process get into serious problem. This is the reason, why Rappaport said that cash is a fact, profit is an opinion. Insufficient gross margin. This is another major problem which no one mentioned. Is the gross margin of the product that you are selling sufficient to cover all the contingencies and then still give you a profit? We will see all these 12 and then one more as a bonus to all these, which will help you build your business. Please remember one thing, gentlemen, the concept of simplicity. All these are very simple solutions. Very, very simple solution. Living is as easy as just breathing, taking in air and letting out air. That is how simple life is. Similarly, cash flow can be handled in a very simple manner. All you need to do is make a checklist. Periodically, maybe once in a week, go through the entire checklist and say, have I got the cash reserve necessary? Are my invoices being paid in time? All these things, once you do, just a minute, someone has scribbled on it. Yeah. The moment you do that, the moment you take the checklist and work it out, everything will become easy and you will be able to run your company in a very smooth manner. So let us start first. This. We will start with cash reserve. Not having a cash reserve. Most small businesses have an inadequate cash reserve. Or worse, they have no cash reserve at all. This situation leaves businesses unprepared to handle unexpected circumstances and emergencies. An inadequate cash reserve is probably the most common cause of cash flow problem. And it is also the simplest to solve. A proper cash reserve allows you to weather short-term emergencies. Suddenly a payment has to be made. Or suddenly an opportunity comes whereby you can possibly buy a raw material at a very, very less price. Or suddenly an opportunity comes where by spending some amount or taking some decisions, you can corner a huge amount of business, but you don't have extra cash with you. It allows you to focus. This extra cash reserve, this cash reserve will allow you to focus on running your business during not just difficult times without affecting operations, but also take advantage of opportunities in the market. So what is the solution to this? The solution is very simple. It is nothing which you need to break your head about. The solution is simple, but requires discipline. Start building a cash reserve for your business. First, budget your current requirements. What is it you require at real time? And then create a forecasted expenses of the next 3 months. Forecast. That becomes your requirement, that much money you require. Then what do? Start diverting revenue. Reduce some expenses in those places where you can and start diverting the revenue towards maybe a recurring deposit or a savings bank account and continue building it till the account grows to the value that you want. The value normally companies use to have a cash reserve is 3 months. That means if your current budget and your forecasted expenses tells you that you require at least $1 million to run your company, then you should have a cash reserve of at least $3 million so that you can overcome any contingency that comes. Make sure to divert the reserve, make sure to build the reserve, divert a small portion of a revenue to a separate savings account. And depending on your circumstances, build your cash reserve to cover a few months of business expenses. Most companies, good companies, have a 3-month amount as the reserve, and they don't touch it at any cost. They don't touch it at any cost unless there is an absolute emergency. Don't invent emergencies and don't think, okay, I will draw from this here for this, and then I will. Don't do that. It should not be touched at any cost. That is what is meant by a cash reserve. Now we come on to the next. Slow paying invoices. Slow paying invoices are a common cause for cash flow problems. At least 4 or 5 of you mentioned payment not coming in time. Payment not coming in time and slow paying invoices is more or less the same. As a small business owner, you are constrained to offer your customers a 30 to 60 day time to pay. However, the problem is small companies can't always afford to wait this long for the payment, and because you are a small company and you depend upon this customer a lot, the customer also sometimes takes advantage and pays as per his convenient. That becomes a problem. You need money sooner, and the value of money is only if you get it in time. I want today $1 lakh, and if I don't have that, then getting tomorrow the $1 lakh is of no use. I needed it today. They need money sooner. Eventually, slow payments create a financial problem that can seriously affect your business. Even if it is growing, it can affect your business. So what is the solution? The solution, there are 2 solutions to it, very simple solutions. Number 1, offering an extra discount of 2% or 1% or whatever it is. You can negotiate a discount with your customer and get him to pay immediately. The second is what most companies, medium and small scale industries do, that is called invoice factoring. An alternative is to use invoice factoring to finance low paying invoices. This method improves cash flow immediately and enables you to offer payment terms with confidence. You know, I'm sure most of you know about invoice factoring. In India, there are various agencies like Credex, Invoice Mart, Priority Vendor, Falcon Group, M1 Exchange, or, you know, in Zambia also, there are a lot of things like Microfinance Zambia, invoice discounting system is there. And then Union Bank of Africa offers invoice factoring. Israel Loans offers invoice factoring. Like this, you know, there are a lot of agencies, microfinancing agencies, non-financial banking companies who offer invoice factoring. Even invoice factoring is institutionalized by the government. You know, in India, they have tied up, the government has tied up with Axis Bank to do invoice factoring. So if you go and check up, you will be able to find out those agencies who will help you with invoice factoring, and this will ensure that you get the payment immediately. Now, many of you might be thinking, you know, you'll have to give extra percentage of money as commission to those who are invoice factoring. True, you have to. But just imagine, all of you are working with finance from bank or overdraft facility, or you have taken loan from, you know, non-financial banking companies. All of them are charging you an interest. And when you use that money, you pay interest to them. But when you are going to be doing invoice factoring, you are going to be paying commission to that company, but you will not be using this money. So that amount of interest will come down. And in the process, your cash flow will be healthy. And you will be able to build your company in a predictable manner. You will be able to build your business in a predictable manner. Companies who are forward-looking and who are growth-oriented, and company owners who are interested in developing that business always go invoice factoring. Consider it if you are not doing. And look at it very seriously if you are doing, and try to see, work out an analysis to your accountant. How much money is being blocked on an average in a month because you're not doing invoice factoring? That much you are paying as an overdraft facility to the bankers and, you know, non-financial banking companies, which you can save if you do invoice factoring. And what is the difference between the commission and this in the interest which you are paying, and how it is profitable to you? Work it out. Next is, as someone said, expensive debt. Debt always comes with an expense. When you take money, you have to pay an interest, and that is always a Damocles sword over your neck. Excessively high debt payment often cause cash flow problem. Consequently, the company can't afford its existing financing. Over a period of time, the interest payment eats away into the vitals of the organization and destroys it. This problem is common for companies that have cash advances, lots of cash advances and loans. What is the solution? The solution is very, very simple. If the cost of debt is too high and takes away most of your revenue, consider refinancing loans. Refinancing enables you to replace a loan with high payment with a new loan that has lower payments. Payments can be lowered by either extending the length of the payment terms, lowering the interest rate, or a combination of both. If you have taken a loan and a commitment of 5 years, and you're finding that the cost of interest is very high, maybe you could restructure it to be repaid in 10 years. Then the interest payment cost will come down. And subsequently, in those 10 years, the cost of money will also keep going down, and in the long run, you will benefit. Try refinancing. And if you have got multiple loans, you can achieve the same objective using debt consolidation. Consolidation combines multiple loans and replaces them with a single loan with more affordable payment terms. Look into it. This is one place which we never look into. As the Reserve Bank or your central bank in whichever country you are keeps changing interest terms, we never look at it. And the bankers keep on pushing that burden on to us. We take it for granted. It appears as if it is not a big amount, but when you look at it in the long run, it becomes a very, very, very big amount. So, refinancing the loan and debt consolidation can help you. Remember one thing, every penny saved is a penny earned. Every penny saved is making your cash flow that much stronger. Don't let go any opportunity to enhance the cash flow of your organization. That brings us to overhead cost. High overhead expenses are the cost of running a business that are not tied directly to selling a specific product or service. Example of overhead includes rent, telephone, utilities. All these may not look very big when looked at individually, but collectively these overhead expenses get out of hand related to the revenue the business produces. High overhead expenses can hurt your business cash flow very seriously. And you have to keep an eye on them always. Overhead expenses particularly are challenging because they are persistent. Every month, first, all these will come visiting and you have to attend to it. These expenses affect your cash flow every day until the problem is corrected. So what is the solution for these overhead expenses? The solution is audit your expenses. Be pathological in auditing where you're spending it. Cut back where you can. Be careful not to cut too much, as that approach could also hurt the company. If you cannot cut back the expenses, if all the expenses that you are currently making are absolutely necessary, there is no way you can cut it back, then look at cheaper options for the same expenses. Being frugal, it's a positive quality, it is not a negative quality. A businessman who is not frugal in his approach is asking for trouble. In your personal life, with your family members, in ensuring a quality of personal life, you can afford to be luxurious. But when you are doing business, you have to save every penny. If you're not saving that penny, you are in trouble. So consider cheaper options. And this audit and considering cheaper option is not a one-time job. You have to continue this periodically. Every 3 months, sit down and do it. It might take some time. But the more you look into it, the more you will find avenues of saving cost. And the more you find avenues of saving cost, better will become your cash flow statement. That brings us next to excess inventory. This is one of the major problems which are there in the industry. The problem can affect companies that manufacture goods or resellers that keep a warehouse stocked with products. If too much product is made or purchased, it ends up sitting on shelves and tying up the cash flow. Just imagine, you have excess inventory. This has tied up all the money that you have got. Because of that, your cash flow has got affected. Because of that, you are unable to pay the wages properly and your employee morale has gone down. The commitment of the employee has gone down. Because of that, your marketing strategies and the marketing investments have gone down. The activities have gone down. All this will add further to the inventory problem because the sales will start going down. If sales starts going down, liquidation will go down. Liquidation goes down, again inventory will go up. You are caught in a vicious cycle out of which you will not be able to come out. And ultimately, the company will become sick. If you have to avoid it, then you'll have to ensure that you forecast your sales properly based upon historical data. That means you have to maintain your historical data so that you will be able to predict based upon the capability of your salespeople, the ability to implement your strategies and the strategy you have got and the growth plans you have got, what amount of sales growth is going to be there. You have to be very practical. Be a bit conservative, but do not be over-optimistic, because over-optimism will lead you to trouble. As an entrepreneur, if you're over-optimistic about your sales projection, you will have to manufacture more, and that will lead to greater inventory, purchase of raw material, supplier demand. All sorts of confusions will start. All these confusions begin with a sales forecast. If your forecast is not right, then there is a problem. The second point is, even if you forecast properly, it is not time to look into your supplier capability. Do you have the suppliers who are capable of delivering goods to you at the right time, in the right quantity, with the right quality, so that you will be able to fulfill the purchase orders that you have received? Supplier capability is very, very important. That brings us to the third part, cash flow analysis. You have projected properly your sales. Your supplier is capable of supplying you the goods necessary for you to service the orders you have received by producing them. Now the cash flow analysis will tell you whether you are adequately financed, you have the adequate liquid cash to be able to fulfill the demand of the supplier for the payment. Here comes a very, very important methodology which good companies use. Are you using purchase order financing? The way factoring is for the invoices that you have sold, purchase order financing is for large orders which you place to your supplier. Purchase order financing will ensure that you do not lock up capital in huge inventory and also have a second ace up your sleeve, because it is a firm commitment that will stop you from unnecessary purchases. Purchase order financing will be very, very useful for manufacturers, distributors, wholesalers and resellers, importers and exporters. Whether you are a startup or an established business, you can use purchase order financing to ensure that you don't lock up huge capital in purchase of material and have adequate liquid cash in your hand to build your company while servicing the orders which come to you and purchasing adequate amount of raw material necessary. Now, one very important thing about purchasing financing is, see, this purchase order financing, you don't have to worry, because you can always cancel it when you want. So if there is a slip up halfway through the order, you can cancel it and be rid of it. Check up. Everywhere in every country, there are companies which assist in purchase order financing. You can take advantage of these companies and ensure that you do the purchase order financing and have a good control of your inventory. That brings us to bad bookkeeping and how it can impact your business. Bookkeeping is one thing which most business owners, small business owners, dread or hate, because it appears to be a boring activity that takes a lot of time, and business owners think it is not a productive activity. This type of mistake can really cost them their business. Bad bookkeeping or none can seriously impact your business. You won't be able to track payments. You won't be able to track your deposits or any financial activity accurately. It will also prevent you from getting financing or even paying your taxes properly and in time, which will lead to penalties and interest on late payments. So what is the solution? Number one, get yourself a good bookkeeper, or better still, today with the gig economy coming, you can outsource your bookkeeping. If you're a small company with very limited amount of entries to be made or transactions in a week, you can outsource the job to a good bookkeeper, an accountant who can come once in a month for half a day and do the job for you and create all the necessary entries. And you can sit with him and go through it and understand everything. And build your bookkeeping gradually. Second thing is, get your books up to date in case you haven't been keeping book. The first thing you should do, all those of you who are on the platform who are not currently keeping a book, that you should do is up to date it at the earliest. That will give you a very deep insight into what is happening in your company. Many a time, we do our business based upon, just our imagination, what we assume to be right or wrong, or what we assume is happening. This is one way you can avoid that. And the third is periodically check if you are moving in the right direction financially. If you're not moving in the right direction financially, the sooner you know about it, the better it is. It is always better to go to an eye doctor before you go blind. After you go blind, he will only confirm that you have gone blind and now you will never be able to see. But as you're losing your vision, if you go, he might help you recover back the vision you have lost and see to it that you don't get into trouble. Bookkeeping is something like that. Immediately take steps, those of you who are not doing it. That brings us to ignoring financial statements. Ignoring a financial statement is a sure shot invitation to get into cash flow problem. Keeping good accounting record does not help your business unless you review your financial statements regularly. Unfortunately, many business owners do not do so. They ignore this task and review financial statements only when they have a financial problem or in the end of the year when the auditor has to submit the accounts to the income tax. Reviewing your financial statement allows you to identify potential problems even before they begin. As they say, prevention is always better than cure. Review your financial statements as often as possible. At a minimum, look at them at least once a week. What are the financial statements you should see? Payables aging. How is your payable record? How much of your payable is over 1 week old? How much is over a fortnight old? How much is over a month old? How much is over 2 months old? This payables aging will tell you how well you are using your reputation and creditworthiness with your suppliers. If your suppliers are happy and you have got a healthy payables aging, it means your company is going in the right direction. Receivables aging will directly tell you how good or bad your current cash flow statement is. If your receivables are within the period that they should be, that means you are working with good customers. Customers who stand by their word and pay you in time. Third is a cash flow statement. Cash flow statement is a direct indicator of your liquidity and how well you are positioned to be able to handle emergencies and day-to-day requirements and commitments. Then comes the profit and loss statement. The main categories that can be found on the profit and loss include the revenue, the sales, marketing and advertising expenses, cost of goods sold, selling and general expenses. Then you have the technology, research and development expenses that you are making, the interest expenses. What is the amount of interest you are paying based upon the loans that you have taken? What is your tax commitment? How much do you have to pay the government? And finally, what is the net income? Are you on the plus or the minus sign. This is a very, very important statement which you should look at on a regular basis. It would not be inadvisable to create a P&L statement based upon the size of your company on a weekly or a monthly basis. That brings us to the final one. That is the balance sheet. The balance sheet is a financial statement that reports a company's assets, liabilities, and the shareholder equity. This is one of the core statements which will tell you how healthy your company is. And finally, my dear friends, on a day-to-day basis, make it a rule to begin your day by looking at this statement. Can any one of you tell me what that statement is? The statement is the bank statement. The bank statement tells you what has been the deposits down the day, what have been the withdrawals, what have been the charges which have been put on you. The entire transaction, the money flow is mentioned in the bank statement. Your day as an entrepreneur should begin by looking into the bank statement, which will also tell you how much money is there in the account for you to use. These financial statements are a must for any entrepreneur to understand and go through periodically if he is interested in building his company. There is absolutely no choice for you as an entrepreneur to not do any of these things and think you will get away with it. That brings us to incorrect sales forecasting. In anticipation of greater sales, listening to salespeople or the sales managers, or being carried away by something someone says somewhere, owners often ramp up their business investment. They want to capitalize on the expected demand. If the expected demand never materializes, the business faces a severe financial loss. The scenario often leads to cash flow problem. You know, business owners are very optimistic people. They have the tendency to look at only the rosy picture of everything that is given. When they panic big time. But most of the time, they are in a euphoric world of their own, expecting everything to go their way. So what is the solution? How can you ensure that incorrect sales forecasting is overcome? The best way of ensuring incorrect forecasting is overcome is, again, somebody is scratching. My dear friend, my simple request is, if you don't like the program, you can leave the platform. At least don't disturb others. Maybe somebody will benefit. And if 10 people are working under that person, 11 families will benefit from it. Please don't disturb the program. With folded hands, I'm requesting you. So how do you go about ensuring that this forecasting, incorrect forecasting, is avoided? Number one, have an emergency cash reserve. Have an emergency cash reserve. Even with the best of intentions, when you do that accurate forecasting, things can go wrong. In that case, an emergency cash reserve will help you. The very first thing we spoke about, a cash reserve, that can come in useful at this time. Second thing is handle growth through outsourcing. Outsource whatever you can, be it your manufacturing, be it the employees that you want, services that you want, everything you can outsource today. The gig economy has come in very handy. Handle growth through outsourcing. Plan your growth through outsourcing. Don't go and make investments based upon a faulty calculation by putting your money in it. Third, deploy conservative growth plans. If you're planning, say, 50 units of sales growth this month, start working with 40 units in your mind. Make arrangement for 40 units. Be conservative. And finally, rent assets instead of buying them. Whatever assets you require to fund your growth plans, as far as possible, rent them, lease them instead of buying them outright. If you rent and lease them, you can always ensure that the expenditure is stopped. If you don't want it, you can get out of it with very little hurt. But if you purchase, you're stuck with it for life. Don't do that. That brings us to the next one. Employee theft. This is indeed a very, very serious thing. We want to believe that our employees are honest. We want affirmation that our employees are honest, but then things are not so. What are the various types of employee theft which exist? Number one, redirecting payments and cover up related financial entries. Many companies, you will be surprised to know that statistics says 82% of the companies have reported loss due to employee theft at one point or the other. Billions of dollars are lost by companies from their profit margins due to employee theft. Redirecting payments and covering up the related financial entries is a very common way. Number two, alter invoices and pocket the difference. The invoice will be for $100. In the company's books, the invoice will show $100, whereas the customer will receive a $110 invoice, and the balance $10 difference is pocketed. This is a very common way of doing it. Steal products through a number of methods. Loss of products is a very common way. In India, in places like Agra, Delhi, Calcutta, Bangalore, Chennai, all the major cosmopolitan cities, you have got what is known as a Chor Bazaar, called the stolen market, where original branded goods are available at 25-30% of the cost. Every battery is available, amounts of it are available there at 1/4 the cost. The original batteries are stolen from the factories and sold here. How did it happen? This is a very, very common thing. And then you have finally people who go on tour. It's a very unfortunate thing. Cooking of travel expenses. Going by taxi for 100 rupees and claiming 120 rupees on the ground that there is no, bill available. Having dinner for 600 and charging 750. All these things are very, very, very common in the sales industry. Unearned time or business expenses. You work for 8 hours, but clock for 9 hours and take that 1 hour overtime. See, these things are very common in factories. Now, these types of theft by employees has a tremendous impact on the cash flow and the bottom line of the company. You as an entrepreneur who is sitting at the top, your job is to ensure that your company runs efficiently and the people who work for you do their job. But most entrepreneurs, they do the job themselves. We have seen one of the reasons why companies don't grow or get into problem is busy doing business while they should be, focusing on developing the business. When you're busy doing business and not developing the business, these are all coming under developing the business. Then what is the solution to this? Is there a solution? Yes, there is a solution. Have a solid screening procedure for new employees. Ensure that they have got good reference. Have a solid screening procedure. Don't take anyone and everyone. Number two, Introduce a buddy system. Ensure that every employee, whatever expenses he is responsible for, is substantiated by another person. Like in the banks, unless two people sign the ledger account will not be accepted. When two people have to endorse an expense, you will find that automatically the amount of employee theft will reduce. I do not say it will become zero, but it will reduce substantially to give you sufficient peace of mind and profitability. The third is install video cameras all over the place. It is not necessary that you have to sit and see. The very consciousness that it will be recorded somewhere will prevent people from misbehaving or doing wrong things. This is called the Haythorne effect. Install video cameras, closed circuit TV, CCTVs. Even if it is a one-man shop, install a video camera. Get a bond signed by the individual that he will be honest and will be responsible for the amount of money that he is handling. When people sign such a bond, their awareness and integrity goes up. It is not even necessary that you should enforce that bond at a later stage. And finally, audit the company. That is why good companies always have internal audit. Audit everything regularly. All of you have an external auditor. Talk to that external auditor, and for a small extra amount, get him to come and do an internal audit quarterly so that you will know where the loopholes are. Please remember one thing. Research has shown that 26% of all the revenue that is generated by the company is lost in wastage. 26% is the economic wastage in a company. And this 26% is of the sum total revenue generated. In fact, if you should take care of all these things and ensure an improved cash flow, your 26% wastage could very well come down to a manageable 5 to 6% wastage. Not that wastage will ever become zero. That is not possible. But if you can substantially reduce your wastage, you will be able to enhance your profit. Just imagine, supposing a company is doing 10% loss today. By implementing all these things, it reduces its wastage by 15%. That means automatically it has come to 5% profit. All that is required is a mindset shift of the entrepreneur who's sitting at the top, from doing business to developing business, into looking into the cash flow on a daily basis, looking into the operations in a daily basis, looking into relationships and customer service, looking into the innovation function in his company. Just these three things, if he observes, he will be able to turn around the company permanently and build it into a giant corporate. Don't forget, be it Microsoft, Apple, Samsung, Amazon, Alibaba, they all started off with just one person dreaming to building a company. If he can do it, you can do it. That brings us to seasonal demands, the festive and the famine behavior of cash flow. Seasonal demands require careful cash flow management and planning. Otherwise, you may end up with cash flow problems during the low season. The problem is common for certain types of businesses, those who depend, whose business fluctuates. And most businesses are like that. So what is the solution? Again, you start with build up a cash reserve. See, building a cash reserve is common to each and every one of these. So the first thing you should do today after you complete the program is take stock of your current expenditure profile, forecast your expenditure for the next 3 months, arrive at that amount, and ensure that you plan to create a cash reserve 3 into X. So the solution for festive and famine cash flow problem is build a cash reserve, focus on accurate sales forecasting, Ensure that your forecasting follows a historical pattern. And finally, the line of credit. You can't give the same credit to your customer during festive season as you do during famine seasons. If it is a famine season for you, obviously it is a famine season for your suppliers and creditor and your customers also. So obviously the line of credit has to be different, but the festive season again is a season of a high turnover. So at that time, the line of credit has to be different. This you will have to take care of properly. That brings us to bad debts. Bad debt is a fact of business. Bad debt occurs when you sell product or provide a service to a client who does not pay you back. Bad debt presents an obvious harm to your cash flow and your profitability. And the solution is number one, review commercial credit of your customers. A customer is only important if he pays you in time. If a customer is not paying you, you're better off without him. But many people are scared of taking this decision. The other day I was talking to one of my, customers to whom I am a mentor. He was telling me that X is his business, but 40% of X are people who don't pay him in time. And he has a lot of difficulty, he spends a lot of time and energy trying to follow up with them and get the payment, and he often ends the day in frustration. He asked me what I should do. I told him to cut them off. If you are getting 60% in time, why don't you focus on that 60%, the time you're spending on the balance 40%, and build that 60% by cross-selling and upskill selling to them. Create that extra time which you're spending on this 40% in generating new customers who are like this 60% through referrals from these people, and build your company. Don't throw good money after bad business proposals. Review your commercial credit of your customers. Provide terms only to clients who have good credit and solid payment track record. Otherwise, there is no point in doing business. Your business is not complete till the money is received. The sale is not complete. Extend credit only if safe. What is the use of having profit on the books if you are not going to be generating it? Reduce bad debt risk. Cut it off and lead a simple and happy business life. And if that person is willing to do business with you after you are cutting off, talk to him a better term, a return on his investment, but demand an advance payment. Maybe you can tell him that I will give you this goods at 2% more profit to you, but you'll have to pay me in advance. Work out something, a line of credit, which will be advantageous to you. I'm sure most of you are doing all these things. Maybe some of you are doing all the things and most of you are doing some of the things. But after today, let all of us do all the things. Finally, low margin. Low margin is a serious problem in small business. Just because you want to do business, you keep on cutting down on the margin and offering freebies and discounts to your customers. At the end of the day, you realize you have been busy doing business while you are going out of business. Every unit you sell, you make a loss, not a profit. Small business sometimes sell their products and services for such low prices that they have negative gross margins. The scenario often happens in highly competitive environment with constant pricing pressure. It usually affects small business owners who do not have a clear understanding of their cost solution. So what do we do? What is the solution? Number one, raise the price of your product. Don't look at the competition. Look at what your requirements are. Just imagine, Apple is still the costliest telephone. The handphone costs over ₹1,00,000 in India. While there are companies which are selling the same type of handphone for ₹10. Is Apple worried? He has kept his price and he does the marketing activities to support that price. Raise the price of your product and focus your marketing activity on talking about why the customer should buy it, what you have for the customer, which will make him satisfied with your services. Talk about that. Raise your product, price of your product. Reduce the cost of manufacturing. That is another way of ensuring that you can increase the margins to you. If you find you can't raise the cost of the product, at least look for avenues to reduce the cost of your product. This is where innovation comes in. You can do a value chain analysis, identify the touch points where innovation can be done and the cost can be reduced, and thereby you can enhance your profitability. That brings us to the third point, target economies of scale. Work out a costing wherein you will know which is the amount of production which is required to ensure that at this particular cost, the product will be profitable for you. Work out economies of scale. Even if you are a retailer, maybe, if you buy more amount of products which are really required, you will be able to do it. Draw the product from the basket. If there is a product which is very low margin, drop it. Be done with it. Have products which have got high margin. And finally, ensure that products are priced according to the cost. It's very essential that you do a costing analysis of your product and then make a price based upon a pricing policy which you come to. If you decide that I will always work at a 40% gross margin because my overheads are 25% and I require a margin of 15% to be able to navigate into a profitable bottom line, then you should ensure that you don't compromise on it. Ensure that the products are priced according to the cost. My dear friend, the best way for your business to survive is to follow these cash flow points. If you are going to look into your cash flow statement on a regular basis, create a checklist of the 12 points that we have discussed. You are guaranteed to get out of any problem that you currently are. And be prepared for the recession which is threatening to engulf the earth. It was the pandemic first, followed by the Russia-Ukraine war, which has had a serious impact on the supply chain. And now the China-Taiwan war, where America and China is face to face, is the third major event which is to precipitate any movement. And all these put together is going to push countries into recession. And as business owners, it is always better to be prepared ahead of time. Companies which do not prepare for recession while things are going well are making a mistake, because when the recession hits, they will not have time to make the choice. They are already delayed, and the limit of that choice will reduce. The limitation forces companies to make rash decisions in response to worsening conditions. These decisions can have long-lasting negative consequences. As a first step, one thing that you can do immediately, starting today, is look into your invoices. Manage invoicing and collection properly. When companies anticipate a recession, they usually start by paying their vendors slowly. They will hold back on payment. Invoice that were to be paid in 30 days will now get paid in 40 or 50 days. Invoice that had to be paid in 45 days may take 60 days or more to get paid. And you, being a supplier, will definitely get affected. Companies pay invoices slowly to protect their most precious resource, that is cash, which is on a premium during a recession. However, this behavior negatively impacts the company. So the first thing you should do is look into your payment behavior, how you behave and how your customer behaves. That you have to look into it. So first thing is, offer 30 to 60 days credit plan only to very good clients. Make an immediate list of clients and offer them a credit line only if you are sure that come what may, the money will come to you, because once the recession hits, and if they decide to delay your payment, you will be in trouble. Next, use a well-written contract. If you have not got a contract with your customer, the time is to create a contract with them and get it signed before the recession hits. Because when they have signed the contract, they will have the fear that they have put something in writing in commitment, so they will not want to transgress it. So get a well-written contract in place. Number 3, implement a delivery acceptance letter system. Whenever you are supplying something to someone, create a delivery letter which will specify when they will pay for you for it, and get them to sign that letter when they receive the goods. Nobody is going to read the fine print. And since this delivery letter will be on lines of the contract, even if they read it once, the next time onward, they will sign it and give it to you, and you will have a double armament against delayed payment. Send invoices promptly. Many companies, they delay in sending the invoices. They will supply today and send the invoice for it after maybe 10 days, 11 days. They think it is an administrative job. It is not an administrative job. It's a selling job. It's a part of the sales process. If you have sold today, you should send the invoice today. Because many companies have the habit of paying based upon the invoice date and not the receipt date. Many, they will claim that I will pay you only from the receipt date if the invoice is not there. So you see, sending the goods and the invoice at the right time is very essential to ensure good payment habits and good customer relationship. Follow up with your clients regularly. Many of my clients I have seen talk to their customers only when the payment is delayed. Why not pick them up the phone and thank him when the payment is made? We forget. Behavior which is recognized is repeated. When we recognize a good behavior, it will be repeated again and again. After sending the goods, phone or call him up and tell him the goods has reached, sir. It will reach you tomorrow. It has been dispatched. Kindly confirm to us after it reaches you. Tomorrow, telephone and ask him if it has been reached. When you follow up with your client regularly, you build up a relationship, and we have seen there are only 3 things which help a business run: customers, products, and money. Finally, handle disputes professionally. Don't lose your cool. Be very professional. Put everything in writing and ensure that you have created a situation where the person will have no way out but to deal professionally with you. This is the solution for success in periods of recession. If you are doing this before the recession starts, you will not be affected by the recession as much as those who will be if they don't do this. Thank you, my dear friends, for your patient hearing. Now I will open the platform for everyone. If there is any question, you can unmute and ask me. Thank you.
Sir, thank you for the wonderful session. My name is Shankar. I had one
Yes.
question
Yes.
regarding the capex and long-term investment. You talked about anything, everything when it comes to operational cash flow. But what about the investment?
Yeah, investment and finance cash flow, I did not talk about because, cash flow, I'm sure, Mr. Shankar, you will realize is an ocean. Okay. And obviously, investment cash flow, where you calculate the investment on goods. Investment cash flow is normally the money going out for investment on capital goods. And finance cash flow is all about the money coming in due to financial transactions. That is not the mandate of this program. However, if you have a question, you can post it to me. I will definitely answer you.
Sure. Thank you, sir.
Thank you, Mr. Shankar. We are discussing mainly operational cash flow because the amount of time given was 2 hours and we are, just 11 minutes short of those 2 hours. Now, all those of you who want a video recording of this program can put your
Yes. Is this cash flow or working capital is the same, sir, or is it different?
working capital is definitely different. Working capital is different, cash flow is different.
Okay.
You see, the mandate of this program is for small scale and medium scale industries, cash flow, how to handle cash flow. And that too, in cash flow, I have been discussing only operational cash flow, not investment cash flow and finance cash flow. Yes, Mr. Augustus. Thank you, Mr. Augustus. You're absolutely right. Your point is very valid. We don't want to irritate our customer. But the question is, when do you follow up with a customer? There are different types of follow-up. Number one, you can do a follow-up to confirm their order. Am I right, Mr. Augustus? Can you please unmute your video? Okay, no issue. Now, you see, you might follow up with a customer after you send the goods. You might follow up and tell him the goods has been sent. After he receives the good, you might ask him whether the goods are in good condition. Then, supposing, let us say you have given him a 2-month period of credit. Let's say 60 days credit is that. You inform him on 45th day that the payment is due. Am I right? Then 2 days before the payment is due, you can ask him, sir, on so-and-so day, the payment is due. I am sure you have made necessary arrangement for the payment to be credited into our account on so-and-so day. This much is okay, perfectly all right. If on that day the payment is done, you are only going to follow up with him and tell him, thank you, sir, you have received the payment. Correct? If he has not made the payment on that day, what are you going to do? You are going to telephone and ask him, sir, your payment was due on 25th. We have not received. Can you please tell us when we can receive the payment? Is that bad? So he will either tell you, I will make the payment on XYZ day or whatever it is, depending upon the type of customer he is. If he fails again, why are you not bothered about how he feels? Are you feeling good that he has failed again and again? Answer me, Mr. Augustus. If they have a delayed payment history, you should cut it. Because your sales is not complete till the payment comes. You are also doing business. He is not the only person doing business. See, if he wants something which you have, you want something which he has. It's a transaction of equals. If he is not going to honor your sentiment, your respectability, and your need, why should you bother overly about him? I'm not saying you be arrogant. I'm not saying you misbehave. All I'm saying is be professional in your dealing with him. See, we need not think overly about what they will think and what they will feel. If they are people who will feel bad on being asked, they should behave in such a way that they don't give an opportunity to us to ask them. Simple.
In continuation with this question, sir, may I?
Yes, yes.
Is it okay to politely ask them by which date they are likely to make the payments?
What do you mean, is it okay? You have to ask them. Your
Yes, sir.
money is with them. If you have my money, Colonel Ramarao, will I not ask you? Please tell
Definitely.
me.
Yeah, no,
Supposing,
no.
let us say you owe me 50,000 rupees. I ask you, Colonel Ramarao, I'm sure you remember that you have to give 50,000 rupees to me. You say yes. What will be my next question?
When?
By which date can I expect the money?
Correct.
That's all. And then I will not disturb you till that day. One day before that, I'll send a message to you, Colonel Ramarao. I hope you remember that tomorrow you have to pay me this amount.
Correct. So instead of keeping the things open-ended, we can ask them by which date you are likely to pay. That's it.
Obviously,
Yes.
already I said, the moment you send the goods, send the invoice.
That's
When
it.
the goods goes there, take a letter of receipt from them. The letter will contain details of 40 days from date of receipt you have to pay. You are receiving it on
Correct.
25th on the next so-and-so date. So 25th, 10 days, and then 30. By 31st of next month, you will have to pay this amount. They sign it and give it to you. Now it is there in your record.
Correct.
We are here to do business, Colonel Rao,
Absolutely, sir. Yes.
and relationships will be maintained only if the business is good.
Correct.
You know, there is a beautiful observation from Mr. Mawanda. He has written, I would call it an escalation process. Remind them of payment with letters and emails as they fall due. We are in business and not charity. You are absolutely right, Mr. Wemba. You are absolutely right. We are not here to do charity.
Sir, Mahesh sir has a question to you, sir.
Yes, Mr. Mahesh, long time no see. That is my answer to your question. Ask the question. See, there is if you believe that, then what will happen is there was this guy, you know, who was supposed to be a very important person. The bank manager was very impressed with how important he is, and he was not able to tell anything. He kept on giving loan to that person every time he came because he could say no. At one stage, he had to write a letter to that person. He said, sir, I regret to tell you, you are no more banking with us. We are banking with you. Because all the money was with this guy. So similarly, if you don't take action, when action is due, you will get into serious trouble. Mr. Srinivasan has written, got the message straight, sir. I will immediately implement my assertive follow-up with bad debt customers. Good. Catch them by their collar in a professional way and shake them up. You know, one person asked me day before yesterday, one of my, mentees, So what should I do? I said, don't do anything. Write a letter to that person. That person owes him a huge amount of money. Huge. Nearly 30% of his total outstanding was with him. I told him, make a copy of all the things, attach it, make a clear email, write it, and then send a copy of it to Income Tax Department, Revenue Department, Central Taxes, Commercial Taxes, everybody, and tell them that tomorrow if something happens to me because I'm not getting this money, this person should be held responsible. Today morning he telephoned and told me he had sent such a letter, and that person has telephoned him and told him, sir, we will sit down and work out a plan by which I'll pay the total amount to you. Don't, unless you ask, unless a baby cries, a mother also doesn't give milk, Mr. Mahesh. In such a world, you think people will pay you without you forcing them to? Cut off long-term defaulters. Take them to court. And do business, good business, with people who pay you in time, and be happy. Remember what Rappaport said. Cash is a fact, profit is an opinion. If your entire profit is locked up in receivables, which are going to become a bad debt, and you don't have cash in your hand to run your company, who is the loser? Who are you fooling by thinking that this money is mine? They are not going to pay you. Let us assume the cost of capital is 2%. And you have not received the payment for 12 months. Do you realize 25% of your margin is gone? Yes, Mr. Percy. Ask your question. Thank you, sir. Then you have to create that contract with your customer. When you are, see, based upon the type of business you are, you can enter into a contract with your customers that you have to pay me in so many days. If you don't pay me in so many days, for every additional day, this sort of an interest will be charged. You can have 36% interest. You can tell them that you will have to pay 36% interest on the outstanding amount beyond 30 days. That will be a deterrent to your customer to delay the payment. And once you have created it, you should force them to stick to it, and you should have the courage to say, I will not supply to you unless my payment is released. You see, business is about clarity. You should be clear in your mind what you are doing. Like Mr. Memba has again observed here, when you keep bad debtors, they will sink you. You're absolutely right. They will be using your money at the expense of your business, and you will suffer. They will not. They will build their company. They will become big people, while you will be going from person to person asking for loan because your payment has not come. And as Mr. Memba says, believe me, most of those clients are your friends and family. He is right. Mr. Memba, can you please come on the screen? I would like to see you. You're talking a lot of sense here. Mr. Memba, where are you? Yeah, That is, again, I told you, the reason is what Mr. Memba has written. You are putting relationship before your business. Like that gentleman asked, he was telling that, will the customer not feel bad? Tell me one thing, Mr. Percy, if it is between you feeling bad and I feeling bad, who is better to feel bad? Because unawareness, lack of awareness is the reason. You see, we have discussed 12 points. See, Mr. Percy, we have discussed 12 points. How cash flow can go wrong, right? All the points were known to everyone here. Who does not know these? Everyone knows it. But how many practice it? Yes, they fear losing customers, but tell me one thing. If I gave you poison and you are hungry, will you eat poison because you want something to eat? Then, so you see, just because you want to do business, will you do business with a bad customer who will never pay you? Then that's what what is bad debt? Bad debt is doing business with a customer who is not paying you. Not on them. The blame is on the entrepreneur. That's why right in the beginning I said, for all the problems which a company faces, the reason is only one person, the entrepreneur. If he is clear in his head what he wants to do, nothing will go bad. You should have the courage of conviction. You should know how to handle your money. You should know how to handle innovation in your company. You should know how to serve and build a relationship with your customer. If these things you know, you are the next Steve Jobs, Bill Gates, Jeff Bezos, or whoever it may be. Your name can be added to that. Thank you, sir. Yes, somebody was raised. Yes, Nagi sir.
Nagi sir.
Sir, nice, wonderful day yet again. One thing I see, I've been in the industry where I've seen people, they use suppliers' money and build their enterprise. They choose one supplier, when the due date comes, they go to another supplier, and that's how the supplier goes to for a toss. This is where we see, am I one among the 1,000 people or am I one among 2 or 3 people? What is my identity with that particular customer? How can I make myself indispensable that he has to be with me? That differentiation has to be basically addressing the red ocean, blue ocean strategy. What is the product? If I'm getting into competition, I might have gotten into some means to do that order. The guy finds it easy, gives the business. Next time he knows that he doesn't want to pay me, he pays somebody else. So I'll be after him. And how long this will go? Someday. And what happens is a systemic process is very important. Many of us, I've seen many of my colleagues in industry, they don't know what is OA, order acceptance. When they receive an order giving OA, this is what you said, this is what I understood. Documentation, that becomes a final legal document. It so happened a customer delayed for 7 months. I just sent, my lawyer sent a notice, within a week the payment has come through. All that cardinal rule we got to follow in this nation, I don't know what other countries is, see that your documentation is a verbal by phoning or telephoning, a follow up for the payments, it's okay, but your written documentation is important. Somebody said email, letters. The documented proof is there, it becomes easy for the judge to decide in your favor. Have the documentation in place. And then, as rightfully service selling, when a customer doesn't want to pay you, why should you serve him more? You must get back your money. You have the right to do it. And you're getting a valuable service. You need to be paid because you have your staff, you have your people, they have to survive. So, as rightfully says, not just doing business, developing business, that got to be in the mindset of the entrepreneur.
Yes.
And that's where you will never fear anyone. Thank you, sir.
Like Mr. Vemba was talking, he was also telling exactly what you are telling. Mr. Vemba was saying that, that there is no point in doing business if there is going to be bad debts. There's no point. It's not just a waste of time, energy, and effort. I think entrepreneurs need to realize that bad debt is a national waste. Because you see, based upon your production and your sales, the GDP is counted. And all these bad debts only go towards ruining the economy of the country. So, we should never encourage it. And as entrepreneurs, we need to be very clear in our mind that we are not going to do business if it is not going to be profitable and meaningful for us. Yeah, like Mr. Vemba just now put that most companies put feelings before business to maintain relationship, which does not help. It absolutely does not help. Like, Mr. Arvind Padmanabhan has written, even my closest business friends doesn't bother to pay if I don't ask. Cash on delivery is a good concept. Yes, for those items where cash on delivery is possible, there should be cash on delivery. Like, in other words, the meaning of this program is that stop looking at what profit you're making. It's only an opinion. Are you having money to run your business regularly and smoothly? That is important first. Okay, friends, it's 5:10. Can we take leave? Maybe we can meet again on some other day with some other topic. I'm very